All right, so we had another busy earnings week, not as busy as last week, not as many big names, but there still was a lot of names I want to talk about. As far as the market goes, let's get right into it here. The S&P finally hit that big 5,000 number. Again, obviously hitting an all-time high. The NASDAQ is a little bit off the all-time high, but it's within striking distance. Bitcoin's making another run up. Again, I think Bitcoin's a sleeping giant. We got the halving coming up in about a couple months, and it's only a matter of time until we see a big breakout in Bitcoin, again, my opinion. So that's basically what happened in the market. Next week is earnings OPEX or expiry. I think we'll probably see a little bit of a move higher, the most likely scenario. We don't know for sure, obviously. My prediction has been for a while, and still is, that I think near term bullish is definitely the route to go. Although I think we'll see a pullback in late spring or in the summer. And it's probably not super deep. I would say in the area of 10 to 15% if I was betting. If I was a betting man, that's what I would bet. And then again, I think we'll close the year up. Again, might not be higher than where we finished on this little run, but I think we will still close the year up, in my opinion, right? Obviously, my opinion. So that's just basically what happened in the market. As far as earnings goes, let's get right into it here. The first stock I wanted to talk about is McDonald's. They missed earnings and sales, so again, not the greatest news for McDonald's, but again, if we look at them on the week, they were actually up a little bit, right? So again, they shrugged it off like it's nothing. Again, it's McDonald's. They're going to do okay. I don't think that they're obviously not going to grow anything crazy quickly at all. But again, it's McDonald's. They're a solid company. The next one is Caterpillar. This is a company I am buying right now, even though it is basically at an all-time high. Although I still think that it's not expensive, right? And I think this is a company that's still, again, you're not going to see 20, 25, 30 or any crazy returns from this stock. But again, for society and the economy to continue to advance at the level that it basically needs to in North America, and not only that, the West as a whole, a company like this is going to have to do well, right? And I mean, if we look at its current valuation, just out of curiosity, I did look recently, but again, it's below its 5-year average price to free cash flow and PE, right? So again, I think that if anything, it's still a buy where it's at right now. So that's one stock that I am buying right now. There's not many. I think it's probably less than 10 that I'm actively buying right now, and this is one of them. The next one is, and again, Caterpillar did easily beat earnings, which again is another very good sign. The next one is NXPI. They beat EPS and revenue. Again, another solid company in my opinion. I do have a small position in this company, but I still would like to get it a little bit cheaper to pick up more, but again, I think it is a solid company. The next one is ON Semiconductor. Again, beat earnings per share and revenue. I don't have a position in this company, but it is on a watch list for sure. The next one, TSN. Again, Tyson Foods. Another similar story. Do not own it, but it is on a watch list. Again, they beat earnings, but they missed revenue, right? So this company struggled a lot recently. Again, they're not even making money right now, which is super concerning if you do own it. So again, I would be super skeptical about getting into this company, which is why I obviously have not bought. Another one, again, that is on a watch list, probably will never pick up. I did own it at one point, made a little bit of money on it, but Palantir, right? Palantir, they did beat, earnings were right on, they beat revenue. So again, another thing about Palantir too is that they are profitable now. This is a company that was not profitable for the longest time. They did report very good earnings, well, not great earnings, but solid earnings. So again, the stock was up actually pretty nicely on that news. So congrats to you if you bought Palantir, because it was that's actually really nice. What was this company up on the week? Just out of curiosity here, let's take a look and see. Wow, 42%. That is crazy, especially for a $53 billion company, right? So again, congrats to you if you bought Palantir, because wow, that was a crazy good performance. The next one is Eli Lilly. Again, they beat earnings per share and revenue. This is a company I never have owned, but again, this is actually a $700 billion company. This is one of those companies that I didn't realize was so big, and I don't think a lot of people realize is so big. And also, when it comes to drug companies, in my opinion, they're very hard to know should you buy or should you not buy, because you need to understand the patent cliffs, the drugs that are in the pipeline, all that kind of stuff. Because, I mean, if a company has a lot of big profitable drugs coming off patent, that can be a really big hit to their profitability and their revenue, right? So that's something that you really need to be in the know. Not that if you're an average guy couldn't figure it out, but I don't want to spend hours and hours and hours doing research on that kind of stuff. To me, it's just not worth it unless you're a professional. Amgen, again, another drug company here. Again, beat earnings per share, although the stock was down, right? So this company got hit pretty hard this week. It was actually at about 330, and it's down to 291 at the close, roughly. So again, it was down quite a bit this week, even though, again, it didn't release terrible earnings, but it still got hit hard. So again, that's what I'm saying. These drug companies, very unpredictable. So that's why I typically stay away from them. Fortinet, again, another company that I am actively buying right now. Again, one of the few. They released very good earnings. They were up quite a bit on the week. They were actually up a lot at one point, but again, they closed up about $5-6, which would probably be about 10%, 11-12% roughly. Again, I still don't. They're still not expensive by any means. Again, they are PE of 45. That probably is a little bit expensive, but a price of free cash flow of 25. I don't think that's expensive. Price of sales of 10.5. That is a little expensive. So honestly, it's probably about fair value where it's at right now, roughly. So again, I'm not super aggressive at this one. I think below 65, for sure 60. That's when I would really be picking it up. So again, a company I really do like though. Spotify. Again, very good earnings they released, and they were up nicely on that news. Again, not quite good enough for me to get interested, but I still think it's worth watching. ACLS, again, another one that is on a watch list. I would like to get at some point, but I don't know if I ever will. They beat earnings per share and revenue. This is a really good company. Again, it is below its 5-year historical price of free cash flow by a little bit, PE a little bit. Honestly, this is actually cheaper than I thought it was. So again, I'm going to have to dig a little bit deeper, because just a bird's eye view here, it looks like this company could possibly be a buy where it's at right now, but I'm going to have to dig a little bit deeper. So I will definitely mark that down and do that. The next one is MPWR, Monolithic Power. Again, they beat earnings and revenue just by a little bit, although it was up nicely on the week. Again, another very good company. This is a company that, again, I do have on the watch list. I would consider picking up if the proper opportunity did come up. Again, it's way too expensive though, right? Price of free cash flow of 73, PE of 78, just way too expensive. A price of sales of 19, that's crazy expensive, right? So it literally would need to come down 40-50%, at least based on current earnings. Another one of, again, the very few companies that I am buying right now, Paycom Software, beat earnings per share and revenue. It was actually, looks like it was down a little bit on the week here, actually. Yes. So again, another company I think is a possible buy where it's at right now. Again, bordering on expensive, you could make the argument, but again, I think this company has a lot of room to grow still. Although again, I think if it went over 210, 220, I think that then I would probably stop, but I do still think it is a little bit of room here that you could be picking it up, at least in my opinion. So next one here is Pepsi. Again, so Pepsi missed revenue. They did beat earnings. That it was hit pretty hard on that news. Again, Pepsi is Pepsi. They have a very good pipeline of products. I'm not overly concerned if I was a Pepsi owner, but again, not necessarily a company that's going to see a lot of growth. So again, that's why I'm not really buying, or probably ever will buy. The next one is ConocoPhillips. They beat earnings missed revenue. Again, I do have a handful of positions in probably 5 or 6 oil companies roughly. This is one of them. Again, I'm not really actively adding to right now, but again, if the price was right, I definitely would. And the last one I have on my list here is Hershey. Again, they beat revenue, although they did miss earnings. Again, I think this is a solid company. If the price was ever a screaming good deal, I probably would pick this company up, but I don't think it's there, and I don't know if it ever will get there. So again, that is the companies I wanted to talk about this week. Like I said, as far as the market goes, I think near term we're still bullish. Medium term, I think that, again, there's going to be a pullback over the next probably 6 months or so. And then after that, I think we close the year. Up. Again, just my prediction. Obviously, again, who knows? We could end up the year 30% up with no dip, or we could see a 30% drawdown and no recovery. Right? Anything could happen. Don't take my word for it. Do your own due diligence. So again, that's basically what I wanted to bring up today. If you liked the video, like, comment, subscribe, and stay tuned for more.